Welcome to this week's Money Metals podcast, helping gold and silver investors during these turbulent times. Now, here's this week's market wrap with commentary and analysis from the low-cost precious metals dealer voted best in the U.S., Money Metals Exchange.
Welcome to this week's Market Wrap podcast. I'm Mike Leeson. The demand in the retail bullion market continues to be through the roof. As such, we are working tirelessly to procure ample inventory and fulfill the truly massive amount of orders that continue to pour in here at Money Metals Exchange. We are continually adding and training staff to bulk up the operation to handle these incredible surges. A lot of this volume is coming from totally new investors to physical precious metals, but a great deal of it is experienced investors who are simply coming over from Money Metals competitors, many of whom are struggling as much as ever with inventory shortages and delivery delays. To be fair, it's a challenging time for any dealer in this crazy environment, but we are particularly proud when we are able to win business from some of our less dynamic and less prepared competitors. Money Metals distinguishes itself from the pack in many ways, and it's more than just our faster shipping, lower premiums, and better customer service. Our fully integrated depository, our automatic monthly savings plan, our online buyback tools, and our secured lending program are some of Money Metals' other clear advantages over the others. Thanks to all our customers, and especially the tens of thousands of new customers that have come on board recently at Money Metals, please know that we are working extremely hard to maintain our high level of service and to meet your needs. Well, there's no doubt about it now. We're in an explosive period for precious metals markets, so let's get right to this week's price action. Gold prices surged to $1,900 an ounce on Thursday before finishing the day slightly below that key level. As of this Friday recording, gold is back above that mark and currently checks in at $1,910, up 5.1% for the week. Gold could hit a new record high as early as today now. However, it wouldn't necessarily be a bad thing if the market first pulled back a bit and established a base for its launch to $2,000 and above. A negative divergence took place yesterday in the gold mining stocks, which fell a couple percent as a group. That may suggest some corrective action ahead in the gold market, but on a long-term basis, neither the miners nor gold itself appear to be anywhere near major bull market tops. As long as the U.S. Congress and Federal Reserve keep pumping stimulus dollars into a moribund economy, upward pressure on gold will likely persist. Another stimulus package is coming, with $1,200 checks for most Americans and hundreds of billions of dollars for various other programs. It will all be financed with more debts and ultimately with fiat currency created out of thin air. Successful American capitalist and past Money Metals podcast guest Steve Forbes warned on Thursday that the gold market may be anticipating a, quote, Category 5 hurricane ahead.
When gold moves up, smart investors pay attention. The yellow metal today is up about 60% where it was 2 years ago. It has jumped smartly in recent days. The surge is a warning. The Federal Reserve, America's central bank, is starting to create too much money. And if this continues, we'll face a serious financial and economic crisis, perhaps as soon as next year. Of course, whether we get into serious trouble will depend heavily on economic policy in Washington. If after the elections we get a tsunami of new taxes and regulations, the economy will falter and our central bank will respond with an eruption of new money printing. But monetary policy can't overcome a rip of higher taxes and crushing burdens on businesses. In this situation, the dollar will teeter and will undergo a Category 5 economic hurricane.
Well, it's been a big week for gold. It's been an even bigger week for silver. The white metal broke above $20 an ounce on Monday and spiked all the way to $23 by Wednesday. Prices currently trade at $22.79 per ounce after gaining an extraordinary 16.7% or over $3 an ounce this week alone. What's behind the huge move in silver prices? For one thing, the round number breakout to multi-year highs included a wave of short covering. Leveraged futures traders who had made bearish bets against silver were forced to cut their losses by buying back their short positions. For another, demand for physical silver is set to rise at a time when mining supply is constricted. Silver is used in a wide range of high-tech and industrial applications. One of the fastest-growing sources of silver demand is in solar panels and other so-called green technologies. The European Union's Recovery Fund allocates a huge chunk of its spending to environmental initiatives and alternative energy development. The EU may issue green bonds to help boost investment in wind and solar farms and other projects. It's no coincidence that two of the best-performing niche subsectors this year are solar energy and silver mining. Solar panels, as well as the batteries needed to store power at night, require a number of specialty metals, including silver. Investors are seeing opportunity in every stage of solar energy deployment, from the raw materials that go into the companies that sell rooftop panels to consumers. The hottest high-profile stock of 2020 is Tesla. Its shares have more than tripled in value this year. Elon Musk's electric car company is now worth multiples of some conventional car makers despite having less revenue. Tesla's sky-high valuation has left many Wall Street analysts scratching their heads. But perhaps Tesla investors aren't eyeing vehicle sales as much as they are seeing massive growth potential in Tesla's solar panel and battery businesses. In the years ahead, residential solar arrays could become ubiquitous as relative cost efficiencies improve while government incentives and mandates expand. One way to play this trend without buying expensive stocks or speculating on up-and-coming players within the solar industry is to buy physical silver. The upshot is that since silver is also a precious metal, it is also valued for its monetary properties. Silver could appreciate hugely during an economic crisis, currency crisis, or political crisis that creates a difficult business environment even for mining companies. Hard asset investors might also consider adding platinum and palladium bullion to their holdings. Demand for these thinly traded metals is heavily concentrated in the automotive industry, but the PGMs are likely to see an uptick in investment buying as gold and silver continue to gain momentum. Platinum prices are up an impressive 9.6% this week to come in at $933. And finally, palladium shows a weekly gain of 0.9% to trade at a lofty $2,280 per ounce as of this Friday morning recording. Well, that will do it for this week. Be sure to check back next Friday for our next weekly Market Wrap podcast. Until then, this has been Mike Leeson with Money Metals Exchange. Thanks for listening, and have a great weekend, everybody.
Thank you for joining us for this week's Money Metals podcast. Be sure to come back next week. And don't forget to subscribe to our podcast through iTunes for answers to all of your questions, or to discreetly and securely buy or sell gold or silver coins, bars, and rounds. Call 1-800-800-1865 or visit www.moneymetals.com. Our knowledgeable and no-pressure specialists are standing by between 7 a.m. and 5:30 p.m. Mountain Time, Monday through Friday. Or you can lock in your order online, 24 hours a day, 7 days a week. Again, visit us at www.moneymetals.com or call 1-800-800-1865.